Hey traders, it's Krista here. It's about 4:15 here on Central Time. Let's do the daily dose today and see where we are with the markets. We haven't done this in quite a while. The markets have been pretty range bound in here for the past week, and no major moves. The dollar continues to be stronger, looks like. And while the S&P 500, if I pull the chart off here, looks like it may have found a top, at least temporarily in here, through this spike up here into the 1687. After this pretty heavy sell-off, it looks like we're having this sort of pullback in here into this 786 fib zone, and the market is being rejected up there. You can see on the 4-hour chart up here we have this interesting pin bar in there. Now, if the markets are moving down here and trying to get below these zero levels in here, 1630, then they're going to target this 127 extension. If this is the first leg down, then we're having this ABC correction in here in leg 2, and then we're looking for a major leg 3 down that could also extend up into this 1600 level. If the market, however, moves higher above the 786, there is a big chance the market makes new highs and we move higher. So in terms of risk aversion, it's important that we watch these levels, and we can see if the market decides to move down here, it should probably translate into one of the other risk pairs into the market: Aussie dollar, euro dollar, Aussie yen, and the rest. If the market makes new highs, I think the risk trades are going to join in. So that's the S&P 500 for you. I think on the daily chart, it still looks not extremely convincing. You can see this pretty strong rejection bar up here on the daily chart. And right now we have the secondary one, so we could get some pullback in here, but we will need to wait a little bit for the stop to form a little bit more before seeing anything else. On the weekly charts, you can notice we're still in a pretty heavy uptrend. This could be a final wave 5 in here, but how far will extend, nobody knows yet. So pay attention on the S&P 500. All right, let's look at the euro dollar up on the daily charts. And I'm going to try to squeeze the charts a little bit so you can see. You can probably hear everybody kind of talking about this massive head and shoulder up here on the daily charts, with the head in here and the left and the right shoulder. You sort of have a neckline in here, and I'm going to try to just kind of, oh, sorry about that, let me just get rid of this and just try a proper line in here. You kind of have this neckline in here into the euro dollar on the daily charts, and until this level gives away, I wouldn't get extremely bearish on this one. And even then, you guys know that the way this should be traded is probably when the market breaks down. Wait for a retest of this level and see if this is a true break before additional selling in here. But for right now, let's see if this level holds in any way. This market can really well hold and turn around and move higher into a bullish stance in here. And the only reason I'm saying that, it's you can see that it's pretty much in a pretty big range in here. So euro hasn't gone nowhere. There's no trend in here. The 200-day moving average is kind of slowly pointing still upwards in here. It offered resistance on the way up as the price moved higher. But I wanted to still, draw your attention to the weekly charts in here. And after this pretty strong move down in here, we've had this strong bullish engulfing formation in here, and unless we're taking the lows in here, this could be only a retracement before a move higher starts again. So pay attention again, and just watch strongly this 2750 level. Also, we're about 100 pips higher away from it. If we break below and we kind of close, then we can look for more downside. But until then, just kind of pay attention. Today was a bearish day. We're coming obviously after a Monday that the markets were kind of quiet, and we've had the Memorial Day holidays into the US, and there wasn't a whole lot of action. But just kind of pay attention on this. You can see this bearish day in here. On the 4-hour charts, the markets are still bearish. This looks like also like. Okay, sorry about that. I think I accidentally pressed done on the video, so I'm just gonna go right back on it. You can see this 4-hour double bar failure up on the highs here, and then the market was obviously rejected. You've had this first bearish pin bar in here, so the the normal course of the market would be right now to break the lows and move lower, but I'm just curious about this level and continue to watch this level before committing to any stronger positions in here, right, on the euro dollar. So that's what's going on in the euro. Let's look the Aussie. I think it's hitting some pretty interesting levels in here. Apparently we're finding some strong support at this 96.20, 96.15 zone, and I'm going to zoom in a little bit and you can see how the markets have tried first to break below these levels in here, and you know, they were met with a failure in here, and you can see this double bar formation that kind of moved the market away. We're still in kind of this downside a triangle in here that usually breaks the top to the downside. I would be really cautious in here at these levels and watch for also for failures. The market continues to be in a strong downtrend in here, and you can see this you know, rejection bar over here again. So there's no reason to get extremely you know, bullish in here. Just you know, we were watching this reversal pin bar in here. That was a pretty good indication of some upside. The markets have retraced. If you still believe that the market can turn a little bit over here based on this first rejection that you had, this would be a good entry for long with stops right below the pin bar, so the risk is extremely low in here. So if you guys want to take a long based on this formation, this would be the place to do it with an extremely low risk. But if we do break below this one, then all bets are off. Also watch for a fake breakout. On the weekly charts, I'm going to zoom out a little bit. You're noticing how we are at pretty good support levels, right? Ever since back in 2010, this market is kind of finding support at this 0.96 level. So we have broken this massive range, and we're moving to the downside. Right now we're over at support, so shorting it in here, it's not suggested. Pay attention, watch for the bottom to form. And we could also turn back and move back here, you know, into the middle of the range in here. So pay attention to that. It's also this 200-week moving average still kind of points upward, but I wouldn't trust myself with that too much. So just there's an additional tool in here. All right. So that's in terms of the Aussie, and what else? It's interesting out there. Not much, I think. The precious metals are still kind of trying to find a bottom here. Not a whole lot. Dollar yen keeps moving higher. It continues to be really strong. We've had this you know, kind of outside bearish formation, but I wouldn't trust it yet too much. We do seem to be in this ending wave 3 in here. You can notice you know, how clearly the market moved in here to wave 1 and then 2, and now you're in major 3, and I'm expecting just a pretty messy wave 4 in here with some, you know, strong consolidation before a break higher in 5, and then probably an ABC correction. So the big juice into this market is gone, so I wouldn't look into here for any more moves in here over long term, but over short term you can obviously try to find some interesting setups in here, right? So that's all I have for today, guys, and I'll see you at the next video update. Bye bye.